Hello, it's Deal bringing you a review of the US markets from an intermarket analysis perspective. Okay, April Fool's Futures Day, that's what I'm going to call this video. The other one I've called is the FTSE 100 April Fool's Futures Day. Today will be April Fool's US Market Futures Day. Basically, it's Whipsaw Wednesday, shall I call it? Okay. The reason why is the overnight session. We actually witnessed a pivot low on the Nasdaq at around the 4270 region, and the actual S&P 500 we witnessed a low around the 2030-2040 region. So one hell of a sell-off overnight. Not sure what actually caused it. Only thing I can attribute it to is the Japanese data that came out. And because it triggered some major levels, and obviously the markets had a major sell-off overnight before it actually recovered into the cash open, which is quite strange. Okay, so either way, it's a cash open that we're all interested in. Yes, the futures are manipulated to a large extent, and one can be vulnerable to the futures markets, although the futures markets can actually help you from obviously losing a lot of money, and can prevent you from being vulnerable to gaps, etc. So that's certainly something to consider. Obviously, sometimes it goes against you, sometimes it can go for you. And on this occasion, it certainly went against me because it stopped out on majority of my trades overnight. I had a Kiwi long, I had a FTSE long, I had a Nasdaq long, and all three were stopped out overnight for minus 100. So that was quite painful. So that's part of trading, folks. Okay, that's all part and parcel of trading, and that's basically how we operate. Okay. Now, what's going to happen with regards to the U.S. markets going forward? Let's discuss. Okay. So from a fundamental perspective, we had the Asian markets in a tailspin. So the Nikkei was obviously lower overnight. The Shanghai and the Hang Seng managed to hold on to gains, given the fact that the Goldilocks scenario of not too hot, not too cold, as in it's a win-win situation, given the fact that we have the economic data that's coming out is not too strong to prevent any further any further increase or tightening, monetary tightening, and the data is not too weak, or is the data is weak enough really, or is not too weak to cause major concerns with regards to a hard landing. The data is just right in between, in the sense that it's not too hot, not too cold, and it justifies a monetary easing, and certainly keeps the spigots open of Kool-Aid and QE and stimulus, etc., and potential rate cuts in China. So that's how they're interpreting the situation there. Okay, so that's just their interpretation of events, and obviously the Shanghai, as we can see, if we bring up a chart of the Shanghai, it's been astronomical. If I just bring up a chart of the Shanghai, here we go. Impressive. Okay, absolutely impressive. We look at that thrust higher. I mean, impressive. That's all I can say. Very, very impressive. I mean, just looking at it from a weekly chart, it's impressive. I mean, we can look at it on a quarterly chart or a monthly chart. Very, very impressive. I mean, it doesn't look like it wants to stop until it gets to at least 585. And I mean, everybody's talking about a hard landing. What hard landing? Okay, because the stock market certainly isn't showing that. Okay, so very obviously we're at the highs, or approaching the highs of 2008, 2007. Very, very impressive with regards to the Shanghai index. Okay, so no real cause for concern there. Okay, the only cause for concern, like I said, and that's from my understanding, it was a Nikkei, the economic data that came out, that actually caused and triggered off the major sell-off in the US and all global markets, basically. Obviously, we had the concerns with Greece in the background, Yemen in the background, and also we had the talk with regards to Iran as well. That obviously triggered off the selling sell as well. Okay, so sell programs, call them what you want, machines, algos. It was one hell of an April Fool's, and it certainly caught me off guard as well. Okay, so that was all those losses were reversed, given the fact that we had stronger European data, so the market started to push higher in Europe. Okay, not only that, we actually reversed almost everything that we'd lost, and we actually gained more as well. So that was pretty impressive, given the fact that the DAX recaptured the 12,000 level, and it's still above the 12,000 level as we speak. The other situation as well with regards to the economic data, the US data, US job numbers came out poorer than expected, so that triggered off the sell programs again. Okay, so the market started to fall, given the fact that we've got the jobs numbers this Friday or towards this weekend, or towards the end of the week. So certainly not a bullish scenario from that perspective. And then also we had the economic data alongside that. We had market manufacturing PMI. Came in slightly higher than expected. Construction spending came out worse than expected. ISM manufacturing PMI worse than expected. So that certainly triggered off the sell programs again. Okay, so it triggered off the sell programs. The markets obviously went into a swoon until they eventually have bottomed out. Okay, so now that we know the version of events in terms of fundamentals, we have the Greece saga still ongoing in the background, the Yemen situation still ongoing in the background, the Iranian situation, obviously potential delay there. And obviously that's the reason why the crude oil certainly squeezed or pushed higher. So that certainly is another factor to watch as well. Okay, so let's start with the S&P 500 like as we always do. Okay, so let's start from a daily chart. Daily chart at the moment we're holding this key purple trend line, so watch out for that. Pivot low as well as held. We've put in a bottoming tail, so two bottoming tails now. As soon as we get into the 2050, certainly buyers step in pretty impressively. Okay, so buyers certainly step in. Obviously there's a potential rise in volume here as well. Certainly a good sign in terms of the pull for the bulls. Okay, from my perspective. For now, horizontal support certainly holding, and pivot lows on the bottoming tails are in there as well. So two key bottoming tails in that region. Now the daily chart will certainly need to be, or weekly chart certainly needs to be watched, given the fact that we are into this key trend line on the weekly chart. If we break, then down we go with a vengeance. So we've got the pivot low here around the 2055 on the weekly chart, and that remains a key. Hence the reason why the daily chart, as soon as we get around the 2050 2055 region, buyers step in. Okay, 60-minute chart, we have a bear flag, we have a double top on the S&P 500, and we have a H&S formation. So there's a lot going on here with regards to the S&P. I mean, you've got the H&S formation here, you have a bear flag formation here. Okay, so, and given the fact that you're holding this key trend line level as well, so one can argue both ways here. You have to be, and this is why we're seeing a lot of volatility overnight, and the market seems to be dancing, especially overnight. So it's very interesting, very interesting right now. We'll see which way we go. Okay, 10-minute chart of the S&P 500. You are holding these lows. We've not made a lower low today, so that certainly needs to be respected. Although given the fact that the weekly chart, the daily chart certainly remain very vulnerable, even the 60-minute chart remains vulnerable, one needs to be very cautious. Okay, but 10-minute chart, given the fact that we've not made lower lows, one has to respect that, and that's basically what I'll be doing going into tomorrow, especially given the fact that the oil price certainly will moving higher, potentially will boost the S&P 500 energy sector, and that should, given the fact that it's heavily weighted towards energy stocks, and that should certainly give it a lift into the 2066 region. And then we'll have to reassess and see exactly where the S&P 500 wants to go from there. Okay, right, so that's the S&P 500. So let's have a look at the IWM, or the Russell, and the IWM and the IWN I did highlight yesterday will be crucial as to the next move in the actual markets, and we can see that already. Okay, so you have an inverted head and shoulders formation on the IWM. So if I just bring this up for you and I can show you this clearly. So you've got this left shoulder here, head in here, right shoulder in here, and obviously we're breaking out. So 10-minute chart looks very impressive on a breakout. Daily chart certainly has put in a bottoming tail, very impressive move, and that's what should keep the S&P 500 higher and the and global markets higher as well. Okay, so given the fact that it's a rise in volume as well, and the Russell generally tends to should lead the markets, and that's exactly what's happening right now. So very interesting observation here. For the bears, one needs to exercise extreme caution. The bulls should certainly start to get excited at this juncture, from my perspective. Okay, 60-minute chart for the IWM, again very bullish. Broke out the bearish, engulfing candle, and certainly on higher volume as well. So very impressive, especially going into the close. So very bullish with regards to the Russell, so therefore that indicates bullishness for the S&P 500. The IWN, again very bullish. Inverted head and shoulders in play on the 10-minute chart. 60-minute chart again broke out of the above flag scenario. Certainly wants to break out and move higher with an unfilled gap above. The daily chart, again, we have this bearish engulfing candle that we are already in, and that certainly needs to be respected for now. But given the fact that this price action looks quite buoyant and bullish, it's just a matter of time before we break out and the S&P 500 follows. So certainly no weakening, no signs of weakness from the IWN and the IWM from my perspective. Okay, let's move on to the Dow now, or the Dow Transportation Stocks. Again, we're still holding this horizontal support, holding the 200 MA on the daily chart. So no real concerns until obviously we break lower. And today, even though with the oil price increasing, the transportation still held in, which was quite impressive. So that certainly bodes bullish going forward. Okay, the Dow, Dow 30. So let's bring up the chart, the Dow Jones. Okay, Dow 30 again. We've held this key trend line, so very bullish. We're putting a bottoming tail, so bullish. No real signs of bearishness. 60-minute chart again, no lower lows. Held that level. Potential bull flag on the 60-minute chart again. No lower lows. Okay, we've held horizontal support. It's very hard for me at this juncture to become bearish. I do need to start shifting my bias. Now, like I said before, I was bullish previously. The only thing that caught me off guard was the actual move overnight, which again I can't really understand as to why that occurred. I'm going to call that an anomaly, light volume, call it what you want, distortion, etc. But for now, I certainly want to be in the bullish camp. Okay, with regards to this market. Okay, so the Dow certainly is holding in there and holding support. So the Nasdaq now. Let's bring up the chart. Nasdaq, again the Nasdaq 100 daily chart. Okay, daily chart again held this key trend line, so one has to respect that for now. Previous resistance equals support is obviously holding this region here. Okay, I did expect this to break down given the fact that the H&S formation on the biotechs, if I bring up the biotechs, the biotechs and give you an insight on the biotechs, you have an H&S formation. Okay, so you have this H&S formation, and given the fact that we bounce and put in a potential bottoming tail, horizontal support, that certainly isn't the case, and I closed my Nasdaq shorts plus 10, although I was stopped out minus 30 prior to that on the spike down post ISM data. So very frustrating there, very frustrating. Okay, so this is basically where we find ourselves. The biotech certainly into support on the daily chart. 60-minute chart, we're holding that horizontal support level. We've broken out. Get rid of this now. Okay, so that's basically levels that we find ourselves in. Okay, so certainly needs to be respected for now. Again, the H&S formation certainly is in play as well, but the IWM and the IWN are not confirming that. Okay, daily chart of the semis again. It certainly seems to be doing pretty well at this juncture. We are into previous resistance equals support. 60-minute chart, we have a potential here for inverted head and shoulders as well. We'll see how it plays out first of all, but the whole concept is we've not put in a lower low, which is impressive. Okay, so again we did initially put in a low for the day, but again certainly an argument there for inverted head and shoulders formation. So we had this pattern here, so a descending wedge triangle and a potential breakout again. So no lower low, and given the fact that it held above the low that was put in on the 26th, still remains bullish. Okay, so potential scenario here for a move higher. So overall, my conclusion, given the fact that provided we don't get another April Fool's situation overnight and my analysis gets ridiculed at this very juncture, I expect the US markets to move higher. Okay, risk on, risk off, wax on, wax off. Goodbye now.